Hi everybody, how you doing? You getting by? It's 4:32 p.m. on a Wednesday afternoon, Mountain Standard Time, July 20th. The price of Bitcoin right now is $23,543, and the price of Ethereum is $1,547, and the price of my favorite microcap token, Giddy, let me check right now, is 4.6 cents. Jeez. Ugh. So here's where I'm at. Full transparency. Measured in dollars, I'm up a lot because Bitcoin is up. In the past 24 hours, Bitcoin is up 0.4%. The previous 24 hours were up substantially more. In the previous week, it's something like 25%. It's a lot. Giddy is down. It's up 0.37% today, but it's down quite a bit over the past several days. What this does to my position means I'm up in Bitcoin, or I'm up in dollars, I'm down measured in Bitcoin. I'm not happy about that. If we have another fluctuation where Bitcoin goes down and Giddy goes up, I think I got to exit my Giddy position. I can't take this anymore. I just need to have my sats and hold on to them. Oh, speaking of sats, speaking of Satoshis, Bitcoins, let's jump over to the headlines. But first, let's play our game, shall we? I love playing with Crayon, the AI artist. How about we try this? Bitcoin Citadel, a shining city on a hill. See what it spits out. Bitcoin is up 6% above the 200-week moving average, according to Rect Capital. To perform a reclaim of the 200-week moving average as support, Bitcoin needs a weekly close above $22,800. So we are currently above that point, but it's Wednesday. We're not at a weekly close yet. So Rect Capital is basically saying, don't count your eggs before they hatch, as they say. This could not sustain. This might not sustain. I am not convinced that it sustains. I think it might go back down again. Macro, we are still in a general downtrend. And do you think it's just going to V recovery, right? It's been going down since last November. Do you think we're going to have what is basically a straight line down and then a bounce straight back up? I don't. That is kind of what we did between 2020 and 2021, which is crazy, right? You zoom out on the Bitcoin chart and you do not see that historically. This double hump right here, like a camel's back, that was weird, man. Nobody thought that was going to happen. But here I am again saying, I don't think it's going to happen again. This V-shaped recovery, as we got so used to saying during the pandemic, this straight line down and straight line up, I'm not convinced. I'm assuming we're going to have a more sustained bear market than this, and that it will drop down again. We shall see. I have not deployed my US dollars to buy in yet, and I may regret that because, again, my stack measured in Bitcoin is down, but I suspect that we're not going to hold this for long. It might be up for a while. It might be up for a couple weeks. It might be up for a month. I don't think we're done with the bear market. People are real eager to say the bear market's over, the bulls are in control. Guys, how long have you been doing this? Has it been a while, or are you kind of new to this? Market cycles take longer than that. So, cheers. Hold on to your seats. This is from Plan B at 100 trillion USD, the originator of the stock-to-flow model, which is basically debunked at this point. That's what he's famous for. But I don't want to throw the baby out with the bathwater and ignore his technical analysis because his famous model turned out to be inaccurate over time. This is Bitcoin's price over time. This is the 200-week moving average, that black line, and we bounced off the 200-week moving average, which we are now above. It is pretty rare for us to be below that point. In fact, looking back, it's exceptionally rare. Anytime it's below the 200-week moving average, pretty good time to buy. Plan B says Bitcoin, nice bounce off the 200-week moving average and realized price. So the gray line is the realized price. And if I understand correctly, the realized price is buys and sells relative to each other. Are buyers up or are they down? The realized price is where they bought relative to where they sold. And are people generally up or down? So those two lines, the gray and the black, more or less converged, and we are now above those lines. We will see if they stay above for the end of the week, which is necessary if we're going to call this a sustained breakout. Okay. We also have this dark blue to light blue. Bitcoin is getting stronger. This is the relative strength index, the RSI of Bitcoin. And we were all the way down here, that blue dot near the bottom of the graph. Hard to say it should or would go lower than that, but I guess that is what people were saying. So we are now in the light blue, slightly recovered area, but I'm not convinced that it's just going to bounce straight back up. We will see. This is what I'm expecting over here. From 2015 to 2016, it just bounced around for quite a while, moving sideways. We have not really seen that yet in our current bear conditions. From Will Clemente, entities with 0.1 to 1 Bitcoin are accumulating like never seen before. Pink line shows the 90-day change. Look at that. Look at that pink line shooting straight up. It's the people with a little bit of coin. They're buying more than ever. So the plebs, the shrimps, the small hodlers, they're stacking up while they can. Good. We need that. We need more of that. We need this currency to be, frankly, widely distributed. Concentration, either in any sense of the word, right? Centralization in any sense is going to be bad for us. And that means centralization in the sense that a small handful of people own the vast majority of the coin. We'll get to that more. We'll talk about that more later. But also centralization in the sense that it lives on servers or it's with third-party custodians, whatever it may be. Any form of centralization is going to be bad for Bitcoin, and this shows that it's not centralized, that it's, at least so far as we can measure with wallets, it's being spread out because lots of different people are buying. Okay. Here we go. This is the title and thumbnail of my video today. Tesla sold 75% of their Bitcoin holdings in Q2. This according to a Tesla earnings call that I believe is still ongoing. Yeah, still going on, maybe. I can't tell. I'm just looking at my YouTube feed, and it shows it going on as a live right now. No, that's not live anymore. They're done with that. Elon Musk bought Bitcoin, and everybody was so pumped, so amped. He's a genius. He's brilliant. And then he started pumping Doge, and people were like, what's going on? And now he has sold Tesla's Bitcoin, 75% of their holdings in Q2. He picked the worst possible time to sell. And they probably, their hand was forced. They had to. In fact, he explained why. He didn't know how long lockdowns were going to happen in China for the newest round of the grand disease that is spread across the world. I'm not sure if I'm allowed to say that word. I might get shadow banned. But Elon said in the call that they were not sure how long factories in China were going to be shut down because of that, and they needed the liquidity. He also said some other kind of silly things, but the timing, Elon, the timing is terrible. You couldn't have picked a worse time. This is another funny thing. Cointelegraph is saying that Bitcoin price dips under 23K after earnings report reveals Tesla sold 75% of its BTC. They are ascribing that price drop to the earnings call, right? Well, Bitcoin dropped from 24,000 to 23,000 because Elon and Tesla announced that they sold 75% of their coin. Okay, guys, there are a lot of times you will see this over and over and over. The news has to tell a story, right? It has to. That's what they do. They don't just publish spreadsheets. They publish stories. Language, constructing a narrative about why things happened the way they did. We don't know why the price dropped to what it did. It dropped to what it did because people sold. That's why. You're trying to guess why they sold, and you're guessing that they sold because Elon and Tesla said that they sold. That's a guess, as best you can do. But in the broader scope of things, yeah, it's not a great signal. From Michael Van de Pope. So not only forced selling from Three Arrows Capital, Luna, and UST, but also Voyager, BlockFi, and Celsius have been causing the markets to crash. On top of that, Tesla sold 75% of their Bitcoin purchases towards cash. That's what caused the crash. That's also why we're close to the bottom. I will contend that we're close to the bottom as well, but I will do that based on the technical analysis that I've seen, not because I don't think the story could get worse. It could. It absolutely could get worse, right? The macroeconomic condition is not better. The Bankless podcast did an interview with a macroeconomist who said, in my entire career, I have never seen a scarier macroeconomic condition. It's true. We are in the everything bubble. Everything. All national currencies, all fiat currencies are inflating. Not to be a complete doomsdayer, but it's pretty scary when you zoom out to the 30,000 foot level and look down. Long-standing institutions and systems don't look stable right now. That's why we need Bitcoin more now than ever. Here's the earnings call. I am not going to play it for you because I'm not sure the audio would be great. But this is a clip. This is Elon speaking. We are certainly open to increasing our Bitcoin holdings in the future. This should not be taken as some verdict on Bitcoin. So he's saying, yeah, we sold some, but we might buy back later. And, we're not saying we don't like Bitcoin. My guy, again, I think you picked the worst possible time to sell. That is really unfortunate for you and for Tesla. It's a bad look. You've got paper hands, my man. You bought high and sold low. It's ugly. Doesn't make him look smart. And Elon does this sometimes. He says stuff that's like, come on, my guy, you're smarter than that. At least I thought. Here's another one. Elon Musk, Bitcoin and crypto are not contributing for an environmentally sustainable future yet. I think he actually doesn't understand the mechanics here. He has not spent time with it, or he's under the thumb of the EPA and other regulatory agencies, and he's being forced essentially to say certain things because it would be in Tesla's, not to Tesla's benefit for him to be honest, right? That may actually be happening. I'm not sure. Here's another one. Elon Musk said Tesla will resume Bitcoin payments when mining is about 50% sustainable. Well, the Bitcoin Mining Council found that Bitcoin mining was a 59.5% sustainable energy mix, right? Bitcoin, more than almost any other category you could ever think of, comes from sustainable energy because you can mine stranded energy. You can set up a miner in a remote location and then teleport the Bitcoin without having to transport energy, electricity. You don't have to build infrastructure. You just need an internet connection. You can do it with a cell phone. He's demonstrating some stuff here that makes me really feel like he either doesn't understand it or he is being forced by regulators to say certain things to protect his company, or they're going to come down hard on him, right? It's like, hey, Elon, say these certain things or you're going to regret it. There may be some backroom dealing like that where it's like he's being forced. For perspective, Tesla still owns over 10,000 Bitcoin, so they are still a big holder. And he also said that Tesla has not sold any of their Dogecoin. Again, he's saying stuff that makes him sound not that smart here. The man is irrationally committed to this meme coin, to a joke. I also have a video. Go to my channel, search for Elon Musk. I have a theory that Elon is a Doge billionaire, or at least he was. So, I made a whole video about that. You can go watch it. It was one of my earlier videos. Still good. Holds up. Wrecked Capitals make a good point here. It's very easy to say in one moment or another when the market is high or the market is low, gosh, the market is really high. I wish I'd bought when it was lower. Or, gosh, the market is really low. I wish I'd sold when it was high. As Wrecked Capital points out, it works both ways. If you don't have the conviction to hold when it's dropped low, you're not going to have the conviction to buy more when it's higher. Let me just read what he says. If you FOMO on a green day, you won't have enough ammo to FOMO on a red day. If you must FOMO, choose a red day. Right? Meaning, if you're going to have to pull the trigger and buy some because you're scared, do it when the market is down. Do it when it looks like you're losing. Your portfolio is down. You're losing money. Right? It's kind of where I am right now. Maybe I just need to pull the trigger and buy. Stack sats. You can keep it really simple, guys. You don't have to overcomplicate this. In fact, I'm wary of people who overcomplicate things. From Dan Held, quote, gold can survive the power going out, but Bitcoin can't. This is the kind of criticism you might get from a gold bug, somebody like Peter Schiff. I'm sure he has said something similar. To which Dan Held points out, no, in that situation, we are trading bullets and food. He's absolutely right. People say that Bitcoin, well, you need an internet connection, you need the power on, otherwise you can't transact in it. What you need is internet, yeah, granted. But for Bitcoin to really lose its value, you would need the internet as a whole to go down in a meaningfully permanent way, right? If you lose access to an internet signal, well, first of all, we basically all have a good enough signal to send a transaction. If you don't have that, I'm sorry, but you can reconnect to the internet later and you will still have access to all of your funds. If this person is saying, well, if the internet is gone, then Bitcoin is worthless. Well, if the internet is gone, my guy, then we've got a much bigger problem on our hands, right? You're trading food and bullets. It's a survival situation if the actual whole internet goes down and stays down. And Michael Saylor has pointed out that if the internet goes down, right, either you're cut off from it or there's actually an infrastructure failure, then Bitcoin doesn't go away. It goes into hibernation. It comes back as soon as you turn things back on. The blockchain is stored in many different places, thousands of copies. It can be duplicated countlessly, right? As soon as any of that comes back online, the thing propagates across the other nodes and your Bitcoin is back. So it hibernates. It doesn't go away. Heidi at Blockchain Chick says, when it comes to securing your hard-earned money, there is nothing safer than Bitcoin over the long run. Limited supply, permissionless, no CEO, global, decentralized, and the most secure network in the world. You simply can't beat it. I love this. I totally agree with her. And notably, Heidi is anything but what you would call a Bitcoin maximalist. Now, Peter McCormick just had an interesting, I think it's Peter McCormick, right? Am I talking about the podcaster or the YouTuber? Two podcasters with similar names. One of them is a photographer on YouTube who does videos. One of them is a British Bitcoin podcaster. That's the one I'm talking about. He did an interview with Udi Wertheimer. It's a weird name to say, Udi Wertheimer, where they talked about what is Bitcoin maximalism. So apparently I'm not the only one wondering about this question, right? I'm somebody who loves Bitcoin. I'm really focused on Bitcoin. I think Bitcoin's really where it's at. But if you tell me that I'm only allowed to talk about Bitcoin and everything else is utter garbage, I'll say, well, that's a bit extreme, don't you think? I mean, can't other chains do niche applications? Can't we see maybe some innovation happen on other chains? There's a hardliner mentality that is not constructive. Even when you have people like this, like Heidi, who say nothing beats Bitcoin for when you're trying to store and secure your hard-earned money, right? There are a lot of people who would say that she doesn't fit the bill. She's not pure enough. It's crazy. They're crazy. I don't like it. Daniel Batten, who is an investor who invests in environmental technologies, who's a big proponent of Bitcoin as the best innovation to help the environment of the past 20 years. He says in this tweet, awareness test, would you trust a Coke report on why Coke's healthier than fruit juice, an Exxon report on why oil's better for the planet than solar, a central bank report on why central bank digital currencies are better for you and the planet than Bitcoin? He's basically saying don't trust the bankers, right? They have a vested interest in bank money, not stateless money. You and I, normal people, we want money divorced from the state, right? We have religion divorced from the state. That's essential. That's necessary. Why don't we divorce the money from the state? That's what Bitcoiners want. It's a novel idea when you put it out there. It was technologically maybe infeasible till now, but with Bitcoin, it's totally feasible. From Will Clement again. Oh, we are certainly open to increasing our Bitcoin holdings in the future. As we pointed out, his timing couldn't be worse. Noah Smith is a columnist with who? The Washington Post? He writes about all kinds of broad social issues, including the economy. He said, for the past 3 years, I've seen politicos and activists shriek that tech will not save us, then shriek in despair as politics failed to save us, while meanwhile, hardworking technologists quietly do save us. He's right? There's a lot of things that I'm sure Noah Smith and I disagree on. Technology has been a huge help in the last few years, while institutions and political machinations have completely failed us, utterly and completely. And this plays right into what I've been saying about Balaji Srinivasan and the network state. We need to rely on network technologies and self-assembled communities as the foundation for future societies, not legacy nation-state systems. All of those are failing. We are watching it happen. And it's very difficult from our vantage point right now to imagine what it will look like when they do really break, when they break in half, when they're beyond repair. I mean, I believe they're already beyond repair, but they're in continual decline. What does it look like when they cease to function at all, right? I don't know. But we can't rely on those institutions for help or a foundation or a good, solid future. It's going to have to come from the technologists, the only people who've really provided solutions of the last few years. And technology is just a tool. It just serves your values. So if you can create a community of like-valued people, right, a community of people who share the values that you share, then you can use technology to foster that community and eventually find actual IRL meat space communities where you can live together. That's the grand plan of the network state, which I need to finish reading. It's been a difficult read. It reads a little bit like a college textbook. It's not fluid like you would expect from a Michael Pollan book or something like that. From Watcher Guru, UK inflation reaches 9.4%, the highest it's seen in 40 years. Like I said, this is happening everywhere. It's happening in the United States. It's happening in the UK. It's happening with the euro. It's happening in Japan. It's happening in China. China has bank runs, right? It's easy to assume without really looking at it that maybe they're doing much better in the Far East, Eastern Hemisphere of the world. They're not. Things are not better there. Here's an interesting thing that I saw. I've talked about Justin Drake on this stream before. Justin Drake is one of the core researchers and developers on the Ethereum chain. He did an interview with Defiant. I'm trying to remember what channel this is. But here's a quote. After the merge, Ethereum will combine the most security and the best scarcity. That's an interesting phrase. The best scarcity. What on earth does that mean? As a reminder, I've met Justin Drake before. I hung out with him at Ethereum DevCon in 2017 in Cancun. Really cool guy. I get along with him. I like him. I disagree with him pretty sharply here. And remember earlier I said I'm wary of people who overcomplicate things? Yeah, I think Ethereum has overcomplicated itself. It is trying to be money in a way that it didn't really need to be, in a way that it wasn't originally intended to be. Imagine playing a game of Monopoly, except you start 100 turns after all the other players. They already own all of the properties, and they earn consistent yield off anyone that joins the game. Why would you play this game? This is ETH after the merge. From what I can tell, the merge just duplicates what we already have. It centralizes things further. It centralizes the money and the control of the money, and the merge itself demonstrates that if the rule makers want to change how the money works, they can do so pretty easily. They're doing it right here, right? Justin Drake said it will have the best scarcity, because we recognize at this point that scarcity is a requisite quality for money to have. But what on earth does the best scarcity mean? Does it mean the most scarce? Well, no, it obviously can't mean that, because I could mint Austin coin today and just have one of them. That's as scarce as anything could be. It still wouldn't be very good money. You need it to be widely distributed, right? And as this person is pointing out, Ethereum is not that widely distributed. It's still very concentrated in a handful of hands. Here's another one from cryptovizart.btc, CryptoVizArt on Twitter. More than 95% of Ethereum addresses of Ethereum's supply is held by the top 1% of addresses. That means more than 95% of stacking yield will be allocated to 1% of ETH holders. Now, in full disclosure, I think Bitcoin has a similar problem where a handful of whales own a huge amount of the supply. But this is worse. This is far worse. And it's being done on a chain where the rules can be changed, as the merge demonstrates. They've done this multiple times. They've changed the rules of how Ethereum works. They've changed the rules. They've changed what it's even supposed to be. When Ethereum launched, it wasn't supposed to be ultrasound money. It was supposed to be a global computer that had an associated cryptocurrency. Then everybody involved realized that cryptocurrency can make us really, really rich and powerful. Maybe we should focus on the currency part of this. And so now they call it ultrasound money, and they've tried to engineer that in. And this merge is part of that, right? It'll have the best scarcity. Good grief, what a weird phrase. Now, there are Ethereans who reject my characterization. Here's Ryan Sean Adams saying, Ethereum Genesis stats. 1 BTC would have bought you 2,000 ETH in 2014. 92% of Genesis accounts have moved their ETH. 693 Genesis accounts have never moved their ETH. 41% of ETH was issued through mining. Ethereum accounts created at Genesis now own just 2% of total supply. That said, it still looks like a whole lot of it is concentrated, right? As this person is pointing out, more than 95% of Ethereum supply is held by the top 1% of addresses. Ryan Sean Adams, for his part, all he is saying is it's not the same wallet addresses that they were initially issued to when the Genesis event happened, when Ethereum came online. This also brings to mind the whole debacle from 2 years ago, when people were asking, what is the Ethereum supply? And there was not a ready answer. Right? Some Ethereans were saying, yeah, it can be easily calculated, and others were saying, well, there's nuance to that question. It was up, it was down. It's a very different perspective. Ethereans believe that they can craft money in whatever way they please, and that it will work. And Bitcoiners believe there's a way that this works, and there are a billion ways that it doesn't. We need to stick to what works. And what works is a known supply and a known issuance rate, which is what Bitcoin has. As it stands right now, that's where my head lands. I think Bitcoin does money better. Bitcoin's better money than anything else, certainly including Ethereum, even though it purports to have, quote unquote, the best scarcity. All right, I got to get out of here. It's almost 5 o'clock. Have a good evening, everybody. I'm going to go for a hike. Hope you can get outside, touch some grass, enjoy the world around you, and we will be back again soon. Oh, let's look at what our shining city on a hill looks like. Nice. Someday, friends, someday, I hope that I can join a network state that eventually does have an actual citadel, shining city on a hill. That's cool. All right, I'm out, team.